Would you like to learn why I believe a Bitcoin and crypto collapse is incoming? Would you like to learn why I don't personally think that we are even close to a Bitcoin and crypto bottom? And I'm going to be presenting to you evidence why I think we are not even close to the max pain, which I think is coming for Bitcoin and cryptocurrency as well as financial markets. I think it's going to be dangerous. It is going to be cataclysmic. It's going to be harsh AF. And I'm going to be presenting that to you. So although a lot of these videos are over an hour, I would say make sure you watch at least the first 20 minutes of this video as to why I think all the people that are saying that crypto, Bitcoin, and financial markets have already bottomed, why they are lying, and why I think worse is to come. Now, if you don't already know who I am, my name is Suppoman, your superhero of cryptocurrency. I find you the 100Xs. And in this video, I'm going to be presenting to you why I think that the best opportunity to get 100Xs is in the future and not now. So let me just make sure that you can hear me and everything is fine. Yes, it seems so. Although, hold on a minute, for some reason, I seem to have the old thumbnail in here. So bear with me 1 second while I just make sure that that is not the case. Yeah, it shouldn't be. Anyway, hopefully it will self-correct itself. So I am going to now share this over to the good people of Twitter so that everybody can know why I think that we have got maximum pain coming up. Okay? So, if you will remember, in the last video, I brought to you the 4 occasions that Bitcoin bottomed and why I think that the particular indicator I presented to you at the time was accurately predicting bottoms. So if you're enjoying, if you want to learn more about this, make sure you smash a like on this video, subscribe to the Suppoman, hit the bell notification to all so you can be told when I am going live. Right, so these 4 bottoms were, as I brought to you in the last video, October 18th, 2011. It was also mid-January 2015, mid-December 2018, and March 12th, 2020. And as I showed you at the time, I plotted each of those dates on the Bitcoin price action on TradingView. Okay, so if we just go back to the beginning, the first one was mid-October, 15th of October 2011. That was pretty much the bottom of the first cycle of Bitcoin. The next one was mid-January, so 15th of January. There we are. The bottom was hit on that occasion. Then again, we had mid-December, we had the third bottom, and that was hit. And then the fourth bottom on the 12th of March, that was hit. All of those were explained by the fact that Bitcoin dropped below the cost of production. And the cost of production today is $13,000 based on research from JP Morgan. Now, I've spoken to people who say it's slightly more expensive, people who say it's slightly cheaper. In my personal opinion, it is actually around about, on average, about 13K. So it makes perfect sense. So should Bitcoin drop below this 13K, that may be the next bottom. However, these have been during market cycles that are non-macro related. Each of the crypto cycles that I took you through are essentially Bitcoin specific or crypto specific cycles where it needed for that particular event to happen, which is that Bitcoin went below the cost of production and that caused a Bitcoin bottoming. But we are in a different environment right now. The environment we are in is we are now in a soft recession. So as I brought you in the last video, which I predicted this would be the case, I think everybody pretty much predicted this would be the case, is that the US economy had a second quarter, consecutive quarter of negative growth. Right? Now that would normally signal a recession. However, it seems to be quite clear that politicians are saying it is not a recession. So whilst 2 consecutive quarters of negative growth is considered a recession, it's not an official definition. a non-profit, non-partisan organization called the National Bureau of Economic Research determines whether the US is in a recession. The White House has pushed back against calling the current economy a recession, citing job growth and foreign business investment as signs of strength in the economy. Janet Yellen, who's the Treasury Secretary, has said exactly the same thing. So when asked if the technical definition is 2 quarters of contraction, you're saying it's not a recession? And what she says essentially is that we are in a strong labour market when you're creating almost 400,000 jobs a month. That is not even a recession. So if we have a look through all of the previous recent recessions, those that occurred in kind of the 20th century, then what we can see, 20th and 21st century, is we can see that peak employment is normally relatively high. Okay, so we can see that it's at worst, at the best 6%, and at worst in the 20s, so 21% and 14%. So it can get very high, but at this present time, we are not in a bad job employment economy. Okay, however, I would say that actually is bad news for crypto, because if jobs at this present time are very healthy, if businesses, which is what this graph shows, so corporate profits after tax, if earnings are amongst the highest they have been, and yet Bitcoin has fallen from 70k to 17.5k, and we have seen the S&P, the Dow Jones, the Nasdaq, the FTSE, all of these have dropped, and they have all dropped significantly, but earnings are still high for major corporations and general business. So that says to you, how bad can it get when these do get much worse, which they are going to. So let me just take you through some things as well. All right, I'm going to take you through all of the reasons why I think that we are in for some maximum pain. Do not miss this. Okay, so first of all, where are we now? So there is an argument to say that Bitcoin has not fallen dramatically since we have been told we are in a soft recession. Since we've got 2 consecutive quarters of negative growth, Bitcoin has not really fallen. In fact, it's only grown. So before the announcement, we were at 20.8k for Bitcoin. We have gone as high as 24 something K, and now we are slightly retracing back to under 23, but Bitcoin is still looking relatively healthy. So why is that the case? Why should I be saying the Bitcoin bottom is not in when it looks as if we have hit a local bottom? Things have cascaded so badly. So essentially talks of recession, the Fed interest rate going up over the course of months since quantitative tightening in March of this year. Since the 3 really huge and catastrophic events that occurred in cryptocurrencies, which were Terra Luna, Celsius, and 3 Arrows Capital, and then Voyager, when they all happened kind of in unison, and they, in conjunction with talks about the economy, sent Bitcoin to 17.5. Why? And since a soft recession has been announced, we have actually gone up. Why am I saying the bottom is not even close? Okay, so let me just show you something. If we zoom out, what we see right here is very similar to what we saw all the way back in 2018. Okay, we had Bitcoin hitting a top, it bottomed, it had some rises and some falls, and then we had this bear trap and another bear trap. Okay, so these bear traps, people were thinking, oh, price is going to go up, price is going to go up, and it didn't. It went down. Back in this one, again, which looks very, very similar to where we are now. We've got 2 bear traps here. These 2 bear traps. And from the last bear trap that happened before the significant fall, people are saying, right, we've hit a bottom. And I was one of them. Okay? Look, this is one of my tweets all the way back from mid-2018 where I said, was what we saw the bottom? Did you buy? And if you didn't, why did you not? Okay, so I was one of those people that were saying the bottom was in, the bottom was in. I was one of those people that essentially fell for it, just like the people are today. Okay, so was one of those people saying you should buy now, buy now. We could have hit a bottom, but we are still going to go, much higher. So even buying now is a good time. And then what happened, literally at the end of the year, look at these prices, look what occurred for Bitcoin and other cryptos later on in the year. They shot down even more. So what I'm trying to tell you is that you can be taken into this way of thinking that we've hit a bottom, prices have gone so low, the percentage drop is huge, and as a result of that, max pain has been hit, now's the time to accumulate, etc, etc. Alright, so I was one of the people that fell for it all the way back in 2018, and of course, look what happened. So we smothered this 6k area until we fell through it. Where I think we are now at this present time is this is the 20k area. Okay, so if you see here, we went down to 5,600. The kind of floor, the bottom floor was about 6k. So we went way below it to 5,600, which looks very similar to when we went significantly below 20k when we hit 17.5k. And then we have recovered. Very similar situation to what happened here. And then we danced around that bottom for a while, that local bottom for a while, until eventually, bang, we fell through it. We had a 3-month period where Bitcoin was essentially $4,000 or less than $4,000. And this is why I personally think that Bitcoin from where we are now, so if we essentially extrapolate where we are right now to where we were in 2018, this is the 20k area, this is the 10k area, because this is essentially a 50% drop, 6k to 3k, so essentially this is 20k to 10k. Alright, so where I think we could go is we could go significantly lower. And that what we are in right now are just traps. They're just traps to make people think that we are going to go higher from this point, particularly because we have had such rapid drops recently because of the Fed interest rate. Okay? Now, you may think, okay, Suppo, right, at this present time, it all sounds very much like conjecture, guessing. You know, you're saying it could be just based on a previous crash that you experienced. But what decent substantiative evidence have you got that we are nowhere near a bottom? Okay, so here we go. This is the S&P 500. Now, the S&P 500 essentially reflects actually most of the financial markets at the moment. So if we have a look at the Nasdaq, very similar situation. We've got a support line here, which is essentially propping up the price. The same can be said for the Dow Jones. We've got this support line here, which is essentially propping up the price. Okay. Now, for all of these have got a base support level. This is a base support level. This is a base support level. This is a base support level. Okay. Now, back in the last major recession of 2000, it started in 2007 and ended in mid-year 2009. Okay, so let me just take you back to how it was back then. Okay, so this is what we had back then. And again, so this exact same is reflected in the Dow Jones and the S&P 500, which is essentially what we had from around about the end of the end of 2007 until around about the end of 2008 is we had this support line. Okay, so this support line, if we have a look and see what the percentage drop was to the bottom of the support line, it was 30%. For the Dow Jones and S&P, it was around about the same, about 25%. All right, but what happened when that support area was breached? Basically, we had another huge drop. Okay, so if we just do it on the Nasdaq, it was a 35% drop. If we go to the S&P, and we go back to 2007-8 for that, again, let's have a look and see what the percentage drop was here. So the percentage drop was 28%, roughly similar to what happened to the Nasdaq. And then what happened as a result of breaching the base support level is we went down another 40%. The Dow Jones, let's have a look at this one. Okay, so if we go back once again, this same support line is what I just showed you is existing right now. Okay? Now, again, if we have a look and see what the percentage drop was from that beginning of a recession to when we breached the support, it was 26%. Now, if we have a look and see what happened as a result of that, it went down another 40%. Another 40%. Now, I said to you at the time, this was in 2018 as well, this was a little pep talk. Okay, what I said at the time was my parents hodled stocks through vicious recessions. Okay, this was at a time we were in a bear market in cryptocurrency. And as I said, at the time, they lost 70% of their portfolio. And they lost it from this point, from the high, because they essentially was charting the overall value of their portfolio every month. So from the high, they lost 70%, essentially the same drop as what happened in all financial markets, right? Which was around about 60%, right? So they lost 70% hodling, right? However, what it did was they hodled and eventually it broke even and then even 2x'd on their all-time high. And actually, most recently, it was more of 3x on their all-time high before the recession hit. So it just goes to show you that when you come out of it, when you've bought at the bottom, when you've held through it, you do come out smelling of roses. You do come out making a lot of money if you buy it at the bottom. But what I'm trying to tell you here is that in the last recession, the last major recession, all the financial markets dropped when they breached the base support, which we haven't yet done. Okay, so we haven't yet done that on any of the financial markets. Okay, so if we go to today, if we have a look today at what the percentage drop was, so in each of them it was about 25%. All right, so if we have a look at the percentage drop, 20%. It's exactly the same. So before breaching base support, we have dropped 20%, just like in the last recession, we dropped 25%. And then when we breached support, another 40% was lost. Now, what I'm trying to tell you here is that if my parents lost 70% holding stocks, and that does not happen, okay? In Bitcoin and cryptocurrency, yes, you can lose 70%. You know, a lot of cryptos from its top have lost 90, 95, even 100%. They've lost so much. But in stocks, for that to happen, that is a monstrously evil, horrible, catastrophic event when that happens in stocks. So if 70%, if crypto had existed back then, right, and crypto came out as a result of the last recession, but if crypto had existed back then and stocks lost 70%, which as you saw, overall, it was about 60%, it lost 25%, and then it breached base support, lost another 40% on average. Okay, so overall, about 60 to 65%. So my parents lost 70%. If they had been in crypto or Bitcoin at that particular time, it would have been well over 90%. Okay, well over, if not, going into negative figures. Because we all know that the stock market is like famous for, okay, I've made 10% over the course of 3 years. That's exactly how the stock market is. You make very little returns or diminishing returns in the stock market. All right, so when you see incredibly high volatility during a recession in the stock market, can you imagine how bad that pain is going to be in cryptocurrency? Cryptocurrency, I personally think, has got, and I believe it is going to happen, because if I just show you once again these corporate profit figures, look, businesses have not been hit hard. Employment has not been hit hard. You only need for businesses, during the course of the recession, because remember, in the last recession, it started in December 2007 and it ended in the mid-year of 2009. A whole year and a half, if not a little bit more, of a recession. We have only just started. Okay, there is an argument to be said that we've been in a recession for a few months maybe, but compared to a year and a half, we're at the very beginning stages of a recession. All it takes is for the earnings to go down. Once the earnings go down, businesses have to cut jobs. They have to cut jobs to save on costs. Once jobs go down, it leads to a bad spiral because people lose their jobs. They therefore don't have as much disposable income. Therefore, they can't spend as much. Therefore, earnings drop even more. So actually, it creates a perpetual negative downward spiral where one offsets the other. You know, earnings go down, jobs are lost, earnings go down even more jobs are lost, depression mode. And none of that has happened yet. Look where we are right now. We have not even really begun to absorb the damage that is going to be done by this recession. But there's more than that, okay? There is more than just looking at graphs. There is the whole economic and political situation as well. So what we have got is a brewing war between China and Taiwan. Taiwan is essentially a break-off province of China, okay? They operate under their own laws as such. Now, China and Taiwan are essentially likely to have a very similar war as what we see between Russia and Ukraine. And as a result of that, we are very, very likely to see that the political situation is going to further impact upon the financial markets. Okay? So this is only in the last week that China has announced a military drill near Taiwan. So literally just off the coast of Taiwan, they were doing a military drill where they were firing bullets, explosives, and all of that kind of thing. Days later, China warns it will resolutely safeguard national sovereignty as tensions rise over Taiwan. Now, should there be a war, essentially China overpower Taiwan by a ratio of 14-1. So it's likely to be another political situation where everybody again throws their hat in the mix, and it's likely to once again have an impact on the markets. Energy. So this is the UK. This is specifically for the UK. Okay. So right now in the UK we're in the summer. All right. But when it comes to actually being in the winter, that is where gas prices, oil prices are going to actually be where you feel the hit. Okay. So there's fears energy bills to hit a shocking $3,800 as Putin pushes gas to a record high, likely to devastate millions this winter. All right, so think about pensioners, old people who's, essentially they get a pension, they get a pension paid to them on a monthly basis that is not rising with the level of inflation. Okay, so they are actually being hit hard, not as much money to spend, but bills are going up, utilities are going up, and it's going to be making people either broke or having to sell off assets or investments in order to be able to survive the winter. And survive, because with climate change going on, the summers are getting hotter, the winters are getting colder. As a result of that, essentially with winter, it's going to be extremely cold, and there is going to be a huge amount of money spent on bills, and people are going to realise how badly they have planned their finances. This is crypto-specific stuff. So in the 2007, 2008, 2009 recession, what we had were massive casualties. And we are not seeing that level of casualties right now. Okay, in crypto, we've had 3 casualties, and people think it's the end of the story. We've had Terra Luna, Voyager, Celsius, 3 Arrows Capital. And people think that's the end of the story. People think that's it. We've had our crypto-specific bearishness. It's not going to get any worse than that. Well, let me tell you something. I think that the longer this goes on, and you saw the big fat crashes that took place in 2007, and just to show you as well, because I didn't show you at the same time, the Dixie in 2007, or the US dollar, look at the rise as everything fell. Look at the rise as everything fell. So let's once again, just chart back how big the rise was from bottom to top, about 25%. Okay, now let's have a look and see how far the Dixie has gone since quantitative tightening, which happened in around March. April, March. Okay, so around about here. Okay, 10% rise. Okay, so not even half of the rise of the Dixie in the last recession. Right now where we are is we haven't even hit half of the dip that we got in the last recession, and the Dixie hasn't risen nearly half as much as it did in the last recession either. So everything seems to point to greater pain being felt. And when greater pain is being felt, that is when even more narratives hit, more businesses are hit, more crypto-specific businesses are hit. They didn't think that things were going to go so bad. And I personally think, and I'm not saying this I don't want this to be a prediction or anything, but Coinbase at the moment is very tightly being monitored and probed by the SEC. All right, so I personally agree with this. I think that Coinbase has been listing crap coins as of late, really junk coins. And as a result of that, they have not been careful in their listing process. They have not been careful over the businesses and how they raised money. Okay, only this week I spoke to one of these businesses, one of the ones they recently listed. I'm not going to say who. I recently spoke to them. They didn't even know they were being investigated. They didn't even know Coinbase was being probed by the SEC. That just shows you how ignorant this space is, and also how little damage there is so far compared to how much damage there probably will be by the end of this period. So the likelihood is that Coinbase, having listed quite a few crap coins, are going to be even more scrutinized. And look, Kathy Wood from ARK has dumped her Coinbase shares at all-time lows. It could be the case. Coinbase could be the big, I'm not saying it will be, but I'm just saying Coinbase could be the big crypto business that actually falls during this period. Like the Lehman Brothers of this period. Okay? And a big bailout, maybe like some emergency bailout situation. But either way, I think that Coinbase is an example of a big crypto business that could be smashed in this period. Which I think at this present time, as the politicians wouldn't, because let's face it, they've got midterms coming up, the midterm elections coming up in November. They don't want to put the frighteners on people because they want to be shown as being in control of the economy. They want to say everything's fine. Look, the White House is saying we're not in a recession. Janet Yellen is saying we're not in a recession. They have essentially changed the definition of recession to say we're not in a recession. Everything's fine. Nothing's really bad. And that just shows you they're kicking the can down the road. But essentially what's happening is they are now going to hit a dead end. There's no more kicking of the can. They're kicking the can against another brick wall. They're kicking the can against a brick wall now. Like it is, they got nowhere to go. And once the midterm elections are done and over with, then I think the likelihood is that the inflation situation is going to be almost too bad to repair. And that is when emergency meetings are going to take place. It's going to be big casualties. And that is when you're going to see the max pain hitting. So I personally think there's a lot of life left in this bear market. I think 2023, as I've always maintained, is going to be the worst year of this bear market. And as a result of that, I personally think that that's where we're going to see the major damage done. Where politicians essentially have been lying, have been kicking the can down the road. They have been they've not really been controlling inflation. They've just been essentially putting plaster over an open head wound. Like, it's just not going to work, is it? Put plaster over an open head wound, plaster's just going to be saturated in blood. That is what's happening right now. I personally think we have not even begun to see the damage done. We're only at the beginning. And the thing is that all these bottom callers at the moment in Bitcoin and cryptocurrency, they have never seen themselves a recession. They have never seen Bitcoin, how it acts in a recession. And, if stocks go down even just another, kind of 20%, not even 50%, 40 to 50% after the base support gets breached, Bitcoin will go down 50% at least on that. If stocks go down 20%, I don't think that we've hit max pain in financial markets generally. The Bitcoin will go down 50%, if not more. Okay, so anyway, yeah. Now, also, and this is a very recent article actually on the short Bitcoin ETF, the one Bitcoin ETF that the SEC actually has actually approved, the short ETF. Okay, so what it's saying is investors continue to favor short positions. Okay, so even despite the current, rises in Bitcoin to 24K, is that essentially short positions are what are being is what's attractive right now to institutional client, big rich clients. So volume will only increase. The SEC granted this because they want Bitcoin to fail, or not to fail necessarily. They want maximum damage. They want for Bitcoin to literally hit a bottom we are nowhere near, and then they will approve a spot Bitcoin ETF. But once the damage has been done, so in the meantime, whilst the short Bitcoin ETF gets incredible inflows, 88 million inflows. And this is in the infancy of this particular instrument, the infancy. Okay, once we've actually got real bearish news, once we hit harder times, the likelihood is that the inflows are going to be more approaching 1 billion. And as a result of that, we are likely to see even more catastrophe. And then, of course, we've got the Mt. Gox situation next month. This month. Okay, now it could be the case that Bitcoin is going to start reacting to that. Okay, so currently Bitcoin is at about 23k, 23 to late 22s. The likelihood is that there may be a pricing in now of the Mt. Gox Bitcoin. So essentially, people who haven't actually had their Bitcoins bought off of various funds, bought Bitcoin at an average of $300, they're now going to realize they're millionaires. Okay, so they waited years for Mt. Gox situation to actually be cleared up and some reparation to happen with Mt. Gox. Now this is the key month. This is one of the biggest Mt. Gox related months there has ever been in crypto, and there have been Mt. Gox situations in the past. The Mt. Gox, what was it? It was a liquidator or whatever back in 2018. No, 2019. No, it was 2018, mid 2018. Absolutely shocked the crypto world. The prices dropped 50% because of Mt. Gox activity. This is going to be more significant than that, I believe. And although I don't think it's going to be a max exodus of Bitcoin, max selling off of Bitcoin, there's 3 billions worth of Bitcoins to be sold here. That is small potatoes, really. If you think about Elon Musk selling off his, well, to be honest, he did sell it off at about 30k, so the price did go down significantly after that point. So, 1 billion didn't make a huge dent in the economy in a asset class where Bitcoin has essentially got 26 billion of volume. Then 3 billion can be absorbed. But if it's just pure selling activity, then I do imagine it is going to have an impact on the market. Okay, so this month is a key month as far as Mt. Gox is concerned. And then we have got, as is always the downside, is we have got a falling hash rate. The hash rate has gone down once again only 2 days ago to 177 million terahashes. So that is the third worst in the last month and a half. So that just goes to show again, minor capitulation is also coming at some point. And the last thing that hasn't yet hit is the shitcoin sell-off, okay? So if you're looking right now in the market, what you are seeing right now is that you're seeing people still aping in on degen coins, aping in on like pink sale kind of cryptocurrency. There's one coming out tonight called Tate Coin, which is related to Andrew Tate, the Andrew Tate. Anyway, so, but it's not actually him. I think it's just people bringing it out. But anyway, so that's coming out. People are going to ape into that. That's going to shoot up tonight. And that does not happen in a recession, or shouldn't happen in a recession, which just goes to show Max Payne is not in yet, because people are still confident enough to ape into some shit, make a 2-3x, maybe even more, and they're not frightened. They don't care. Because at the moment, there's no... The market has not been told or advised not to buy right now because prices are kind of surging right now. So the shit coins have not been killed off. This was a casualty I got involved in 2018. Many of you may remember it. I got into Zebi at ICO at about 2 cents, right? This then, and that was in around about March 2018. This then went out to 10x to 20 cents. And Zebi at the time was basically an Indian layer 1. Had a range of different fundamentals in what I thought anyway. And this 10x'd, right? But as the market went on, this got crushed. So it went back down to ICO price and it remained there to around about the end of the year. But it took for another year for people to think this coin's dead. All right. And now you are seeing it with around about $400 of daily volume. I don't know who's even doing that. But what we haven't got is this situation repeated in the market right now. We have not got that max exodus of shitcoins. We have not got a large amount of the shitcoins dying. Okay, so we've got 20,500 coins 99% of which are utter shit, should not even be around, and they're not dying. They are not dying. In fact, let me do one thing. Let me just have a look and see one of the meme coin lists that I made. Let's see how these are doing today. Look, these stupid coins. Astro Elon and shit like that. Look, mind you, having said that, $11. But the point is that, and this is an old list. I put this list together in like April last year, or March, April last year. So these coins should all be dead. They should all be gone dead. Except for Shiba Inu, Doge, Flocky. Those I can imagine will probably still do well. But a load of these other coins, Shiba Pup and all this. So the greed has not been fully starved out of the market yet. So not until we see Zebi situations all across the board where 95% of the cryptocurrencies essentially die, we're not in that period, I think, of max pain yet. Okay, so this is my bear hit list. So I still maintain that I'm going to be buying dollar cost averaging into these cryptocurrencies at these prices. All right. So I do believe that these prices are going to, in the main, be hit. Some may not. Okay, so with the Ethereum merge, like it is, we may not see $300 Ethereum. All right, and one of the biggest plays is Metaverse. So Vitalik Buterin, obviously founder of Ethereum, has said that he personally believes Metaverse is going to happen. He thinks that Metaverse is going to be a big thing. But he thinks that the role of centralized businesses like Meta, so basically Facebook, rebranded to Meta, they are looking to basically create a Metaverse business. But he thinks that the centralized version of Metaverse is going to die. Or at least they are going to misfire. Okay? And the reason that crypto benefits from this is because he personally believes that Web3 is the future of the Metaverse, where everybody decides kind of how it looks for the future. These are ultimately, decentralized, governance-ran infrastructure or projects, right? And the sandbox obviously being one of them. Then you've got ApeCoin, you've got Decentraland. So Metaverse, I think, does and should constitute a decent size of your portfolio. Like maybe, if you're largely in diversified, if you've got majority layer ones and a few dApps, then I think Metaverse is a good play. And of course, the Metaverse plays I've got in here are Decentraland, Sandbox, and you can see the volume is very, very significant in these projects. Same as NIR. So I am concentrating on these cryptocurrencies that have got high volume, okay? Because what it means is that even if we have got max pain, even if these prices hit, these prices right here, which are very, very low, as you can agree, even if they are hit, the inflows going into these cryptocurrencies keep them quite stable so that they will not fall and they're likely to survive until the market recovers. Because if we have a look back and see how long it took for the market to recover for the S&P 500 and everything else. This is the Dixie, bear with me. Let me just look for S&P. Actually, I probably should look at the Dow Jones. Might be a better one. So look, to achieve all-time highs again, it took 7 years for that to be achieved again. Okay, so here we are. So it took until May 2013, having been hit at the end of 2007. 7 years it took for everything to go back to normal. So what I am doing is, just regardless of what's going to happen, I personally think that the pivot is going to happen where people are going to be looking for deflationary assets to get into. All right. And so I think crypto is going to be the asset class actually that shines in this period. Okay, so I think that people are going to hedge into crypto, and I think if you're going to be investing in cryptos, you want to go into ones that are relatively safe, that if you get an incredible buy price, it's not likely to go even lower, and die before the market actually recovers. And so therefore, I am really chasing these kind of high volume, healthy ratios of at least 5-to-1 volume cryptocurrency. So they are very unlikely to die. All right, very unlikely to die. Right, okay, so let me take some questions now, because I am conscious I have not been, but I wanted to get all the information out as quickly as possible because I know what people are like. People are like, it's too long. So I need to try and make sure that I get all most of the information in at the beginning. Right, so I'm going to now take some questions from you guys. So if you want to quite literally smash the like, let's see if we can get up to 300. There's 580 of you. This is excellent. This is like one of the biggest amounts of people watching in recent times. So if we can get up to 300 likes, that will make me very happy. And of course, it will motivate me to bring you more information as I get it. So let's say hi to you guys. So we've got Roman, Julian, Mohammed, I think that is, Roman, Alisan, Lindsay, Digital Sarkora, Patrick, Sando, Chris Marks, Alisan, Severns, Craig, Dijan, Mac Will, Zarnel, AC, Gianna, DeSalvo, Kiran, GK, Ridwan, Zandra Lapole, Danish Richard Hart Maximalist, Mango Juice, Mizwa. Have I got it right this time? Mizwa, yeah, I'm sure I've got it right. King Leonardus, Mike, Tommy, good to see you with the stun alerts. Well, it's me with the stun alerts, apparently. Thank you very much. I appreciate that. Sean, Jeff, Dion. Hi, Suppo. When is this bear rally going to end up in a massive dip? I think that we've just got to wait for it. We've got to wait for it. Suppo, tell me, am I getting 30 cents glimmer price soon? I think likelihood is it's going to happen in 2023, unless you're with Convergence, in which case the Convergence sale is in 2 days' time. So if you got whitelisted, which I did, then you should be able to get that 30 cents Convergence, which 30 cents Moonbeam, which I've been led to believe I was wrong with my figures last time. It wasn't $1,300 worth of Moonbeam at that price. It's like 1,300 Moonbeam, which is a bit shit, to be honest. Richard Hart is a con artist, but has nice stuff in his funny from Jackie Tucker. I really like Richard Hart. Yeah, I think he's great, and I love looking at his watch collection. And that's another thing. Okay, so, it's not just crypto stocks. Everything's going to go down, I think. Like, what happened in 2007, 2008 is we had a massive meltdown in property prices. So property was really the reason why it all happened in the first place. Why the subprime mortgage thing happened in 2007 was the actual trigger to the recession. But, property prices just kept going up and up and up, and then they crashed big time. And that has not happened yet. And I don't think it's going to happen anywhere near to the extent it happened in 2007, if at all, actually, because of the demand. However, it's not necessarily the demand of houses that's going to affect the prices. It's going to be that people don't have the money, and banks aren't going to be offering really good lending rates because of the Fed interest rate. So it's going to have an impact on houses. So the housing bubble, I think, is going to deflate. It's not necessarily going to pop, but it is going to deflate. Houses are going to go down. Property prices are going to go down. Watch prices are going down. So as you probably would have seen if you follow me on Instagram, make sure you do follow me on Instagram. It's instagram.com/suppoman.yt. Follow me on there. I have taken a bit of an interest in luxury watches lately, and luxury watches are going down tremendously. So Patek Philippe have gone down like 30-40%. Rolexes are going down. So in the secondary market, you can't buy Rolexes with authorized dealers. You have to essentially buy them in the secondary market for double, if not triple, the cost. And on the most in-demand ones, 5 times to 100 times the cost. Right? So for instance, Rainbow Daytona is like $1 million when actually it was worth like 60,000. Okay, that's more. 13? I don't know. But whatever the case, right? So it's not 100x. But watch prices are going down. Everything is you're going to start seeing that the longer you leave it, the better the prices you'll be able to get everything at. And I do see that it's going to be first part, I think, of 2023, first half of 2023, where we're going to see the most damage. Okay, so if we charter back to 2007, we can see that things started to fall from October for a year, from October 2007 to October 2008, things started to fall, but the major crashes happened after a year. All right, after a year from the high. So the year high for crypto was November 2021. So from November 2022, so therefore between November 2022 and the first half of 2023, I think is where we're going to see the significant damage taking place. And relatively similar can be said here. So again, it was end of October 2007 that the market started to go down. In 2021, the crypto market and the S&P 500, they went down from mid-November. So roughly a month later than what happened in 2007. But the majority of damage happened in 2009. The majority of damage happened a year and 3 months later. So the likelihood is first half of 2023 could be what we see here. So essentially this is 2021, the come down, 2022, and then we see 2023, the big fall. All right. So I do think that major assets, investment classes, which include luxury watches, because a lot of people, Richard Hart included, did buy a lot of watches probably at 60 grand that are worth $1 million today, like his Patek Philippe Nautilus, his APs and his rainbow, rainbow Rolex. Let's have a look. See what else you guys are saying. Cash is king, then buying at the bottom, win-win. I like that. That sounded like a rhyming couplet. Check Dixie and compared from that time till now. Yeah, I think I did that. This guy is super bullish at the tops and incredibly bearish towards the bottoms. Don't believe me? Look at his previous videos. Yeah, so there's an argument right now. A lot of people have been saying it. A lot of people have been saying, oh, the people who called for 100k are the most bearish now. It's a lot of bullshit, all right? So I was one of those people that thought we could hit 100k, and mathematically, euphoria-wise, we should have hit 100k. Like, that cannot be disputed. 70k was a damp squib compared to where we should have gotten to, which is about 100k. Like, 70k is small potatoes. That's the warm-up. That's the, hey, we're getting warmed up for the big event. And then the big event doesn't happen. Like, let's say it's cancelled at the last minute. Like, going to a, I don't know, concert by somebody, like Harry Styles or something. So it's like the warm-up, everybody's excited, and then avalanche hits, the event is a washout. That's what happened here. And the avalanche that hit was essentially people front ran the macro picture. They front ran it by months. 5 months before quantitative tightening. And that's because the top 1% of the 1% of the top 1% are the ones that front ran it, made an instant dip, everybody started to sell off. Okay? So, what caused the lack of top, and therefore the people that were shouting for 100k, blah, 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 is what's going to cause the major bottom, I think. So the exact same event, the macro picture, is why we didn't hit 100k, and why I think the bottom is not in. People are saying the other way around. People are saying, oh, the people that shouted for 100k are the people that are saying that the bottom's not in. Bullshit. The people that were really saying it's going to be 100k are the ones who are now saying that Bitcoin's going to hit 48k in a month's time, or something like that. Permabulls. Permabulls tend to be 100k, bottom's been hit, bottom's been hit. They call the bottom every dip, but it dips lower every time. Right? So I'm not one of those people. So I don't believe in that logic. I think that logic's stupid. But yeah, I was super bullish, as was everybody. Even Raoul Pal, who I have an enormous amount of respect for, that does call a lot of the moves that take place in stocks and cryptos. And he was thinking that Ethereum was going to hit like 20k in first half of 2022. So, everybody, there should have been that mathematical top for most of the big assets. It just didn't happen. But that doesn't necessarily mean that people are wrong saying the bottom's not been hit. And so I think that there's more people saying the bottom's not in than the bottom is in. And the reason why is because of what we're seeing here. Essentially, politicians lying to you and earnings reports still being relatively high. The employment market being very, very strong. So without big catastrophic events happening in crypto, in the world market, then, it seems logical to think that we haven't yet hit a bottom either. Anyway, let's carry on with the question. I think there were a few super chats, so let me just make sure I didn't miss out on those. Milan, do you think we will see great entries? When do you think we will see great entries in alts? Well, hopefully I've kind of alluded to it without giving a specific date, but I think it will probably be the first half of 2023. I think that's when it's going to happen. RG, no one is terrified yet, but you will be. You will be. I agree with that. The winters are actually getting warmer. They are not. They definitely are not. Certainly not in the UK. Hey, Suppo. Next bought from Wanye West. Hey, Suppo, can you do another Joe Parry's parody in the next bull run? Yes, I definitely will. Would you like to? Bitcoin and the rest of the market are right now in the green. But what is going to happen with Ethereum-based assets? Anyway, I love Joe Parry. I think he's an awesome guy. Let's see what else. What else you guys are saying? Bitcoin. How about a like spike? More than 500 watching, less than 150 likes. Oh, yeah, very true. And we're near. Let's see if we can get up to 300 people, and I will start looking at altcoins for you. Patchstar, I don't think the 3 billion sell-off will hurt us. I think it depends on the market at the time. All right, think about it. Okay, so if you bought Bitcoin, let's just think logically for a minute. All right, you bought Bitcoin at $200. The whole Mt. Gox, takedown happened, controversy happened many years ago. Didn't know you were going to get that money back. All right, so you've had to wait ages for it. You've seen crypto go through numerous bull runs, and then all of a sudden, you spent who knows how much. Maybe you bought 1 Bitcoin, maybe you bought 10, maybe you bought 100 Bitcoins. All of a sudden, what was, let's say you bought 100 Bitcoins at $300 each. What's that? $30,000. And now all of a sudden it's worth, millions. There's a recession. Politicians are lying to you. The rate of inflation is very, very high. And the inflation's very, very high, and the interest rate is not even close to that inflation rate. So they are not effectively battling inflation. Therefore, you expect for maybe the worst to come. Would you not sell? You bought at $300. You get it at $20,000. The price could go down to 10. You could get 2 Bitcoins for every 1 Bitcoin you sell. Wouldn't you sell it? And some people don't even care to hodl. They just want to be an instant millionaire, and they're like, cool, I will buy my island in wherever. I don't need to care about money anymore. Because this Bitcoin I bought in 2013 or 2012 has come back to me, and now I'm an instant millionaire where I thought I was broke. We're coming into a recession. Time's going to be hard. People are going to sell. All right, so just think about it logically. They're not all going to sell, but there's definitely going to be some sell-offs. If the market is not particularly healthy, that sell-off could actually hurt us. But we'll have to wait and see. But I don't think it's going to be necessarily that bad. Angie, good to see you. Fabulous content tonight, Suppo. Thank you for sharing all the info. I appreciate that, Angie. Crypto 7. Thank goodness Hex has decorrelated. Let's have a look and see how Hex is doing. Last I saw, Hex was doing quite well. Down 8%. Seems to be kind of correlated with the market, if I'm honest with you. It looks like it's following the market perfectly. I don't think it's decorrelated at all. I think that Hex at the moment is at risk of going down lower, simply because I don't think Pulse Chain's going to be coming out anytime soon, and I think it only needs for Richard Hart to say that. I don't think he is saying it as much now, because the last time he said it, Hex dipped something rotten. So I think that he's actually not going to say it as much now. But Hex sits alone. It's not going to get help by any institutions, but it doesn't really need to, because Richard Hart and the Hexagon Pulsicon community is so strong. Right, let's get up to date, because I think that the chat has slightly run away. Wow, there's a lot of chat. I apologise. I was not able to get to most of this. But you can now. When crypto becomes super boring, it's time to buy. Yeah, I agree with you. Yeah, that is the time to buy. Yeah, I was around in that period of that wonderful period of 2018. This period here. And the crypto world was alight for most of this period. I remember because I was still doing YouTube videos. Like, the best traffic I got was in this period here. So I was getting, no, so this period here, I would say, was my most traffic. So in between November and January was when I was getting around about 50 to 100k views a video, right? And then it started petering off, so I was getting about 65, 50, 40, 30, and then it wasn't until kind of this period around here that I was like getting 10,000 views. Okay, so I went from like, you know, I was still getting high 5-figure views all throughout 2018. And then once I was getting kind of like 10k views, 8k views, that was kind of the period that it bottomed. Okay, the excitement had been starved out of people. They'd gotten through so many rise, fall, so many surges, then capitulations, that eventually it was too much like whiplash. It was too much emotional pain to take. And as a result of that, you know, the best buying opportunity was actually when the market was quiet. My views were really, really suffering, and nobody was really watching videos, and everybody had exited the market. That was the best time to buy. And like you say, you know, it hasn't become super boring. I'm still very interested in it. I'm still doing crypto on a daily basis. Most crypto content creators also are doing crypto on a daily basis. You know, the market hasn't become boring. There's still a demand for videos. There's still a demand for investment advice, not financial advice. And and until that gets starved out, yeah, let's have a look at the tweet. Yeah, here we are. So just as an example here, you know, this was in March 2018, and I got 171 likes on this. But come this tweet, which was in November 2018, I got like 88 likes, and this was pretty cool. You know, looking at the bottom figures, these bottom figures were beautiful. You know, look, I sound like Andrew Tate there, beautiful. So look, you've got like $7,900, $500 for Ethereum. Cardano was 15 cents. Later on in the year, Bitcoin was half the price, Ethereum was a quarter of the price, and Cardano was a quarter of the price. So, you know, crypto got dead. Crypto had died in interest levels. And that's what needs to happen again. Yeah, so you're right, Milan. That is a good question as well. Is it time to buy? That is one of the best times to buy. Let me get up to date, and then I'll take questions, because there's so many questions that it would take me forever then to get up to date. So it's best I get up to date now. So, Patrick RG, why are you so bullish on... Oh, the message got deleted. I think the question was, why are you so bullish on like Moonbeam and Cadena? I think the reason why is because they are amongst the most exciting cryptos that are still in the very early stages. You know, so, you know, if you look at ones that have already matured over the course of time, matured over maybe a couple of bear seasons, they matured over DeFi autumn last year and the kind of autumn spike as well. You know, the Cadena and Moonbeam certainly did not. You know, Cadena really came to prominence in November and the market reacted to it. It's very promising, and it's low in market cap. So it's 350 million market cap. You're probably saying, Suppo, that's not low. It is relatively low for a layer one that has a promise and a decent community. But, you know, Cadena, I'd like to just buy it at a low, okay? I'd like to buy it well under the cost it is now, because I think it's got more room to travel on the upside and it's less of a risk based on where it is now. Optimism, you know, that has now 3x from when I bought in. You know, one could not have seen that cut. Well, I guess one could have, but I didn't know that the Ethereum merge was going to announce a date, which then brought every Ethereum enabler like Polygon, Optimism, Ethereum Classic, etc. Didn't think I was going to bring them skyrocketing, but there we are. That's kind of now been taken up with the flood, but I'd be waiting for that to go back down roughly to where I bought it at. And Moonbeam, again, like I've said, you know, they have not they have not actually come out in a bear market. They've never come out other than in a bear market. So we are yet to see Moonbeam, which I first covered in, I think it was January 2021. I foresaw as one of the big infrastructures to come out, mainly because of interconnectivity, blockchain interconnectivity and multi-chain, which I think the future is very, very big for. And if we have a look at one of the multi-chain cryptocurrencies that exist today, which is Quant, this has done very, very well. 1.2 billion, rank 44. It's 102, and that is no end. And it got up to like $400. So this is an asset that did manage to mature and have the value find it in a bull market. But Moonbeam has not. Moonbeam came out the beginning part of this year, which means all it has ever experienced is a bear market. And even at that, it came out $14, and at this present time, it's 30x cheaper than that, roughly. Okay, probably a little bit more than that, but you know what I mean. So anyway, yeah. The thing is that you just got to have your favorites. There's 20,000 cryptocurrencies. There's lots with promise. Lots you could throw your money at, but you've got to just throw your money in what you believe in. You've researched a lot. The inflation rate isn't so high. Moonbeam's inflation rate of 5% is actually not that bad. Elrond is higher. The only bad thing about Moonbeam is that it's got an uncapped supply, but that doesn't hurt Ethereum. I do think that ultimately, this will be a really good time to accumulate Ethereum. Should we see the really bad dips, like we saw before. So if this should take place across cryptocurrency, where we've got the breach, if this happens, if we go back to today, we've got the breach support level here. We've got the base support level. Once that gets breached, and look, we are rising high above it. Once it gets breached, then I believe is going to be the time to get into Ethereum. So once, and we've never had this before. If Ethereum had existed back here, it would have been the absolute best buying opportunity. It didn't exist back here. It wasn't going to exist for another 8 years. But, what you're waiting for is for this to happen. You get into Ethereum. Ethereum's going to essentially be deflationary. It's going to mimic a lot of Bitcoin's qualities when ETH2 comes, when the merge happens. So as a result of that, that's going to be, I think, probably one of the most ultimate buys you can make. But of course, if you're going to be buying into alts over 1 or 2 cycles, they'll do really well. But Ethereum will be around, I think, for probably 3, 4, 5 cycles. In which case, I asked a question recently on my Twitter. I don't think I'm going to find it now. I asked a question recently on my Twitter. What coin do you think is going to exist in another, kind of 10 years or something? Let me see if I can find that tweet. I think actually it was a poll. Was it a poll? No. Okay. I don't think I'm going to find it. No, I don't think I'm going to find it. But what I did say was I said something along the lines of, what cryptocurrency do you think will have a chance of surviving kind of 5 or 6 cycles? And most people, most people said the only ones I definitely think are going to survive are Bitcoin and Ethereum. Well, buy them then, But I think that the all-time best buy price coming for Ethereum, you're going to be able to hold that for multiple cycles, is what I think is going to lead to a very long-term fantastic investment. And that is what I would be hoping for, should these base support levels be breached in all financial markets. If it happens in one, it'll happen in all of them. And it will definitely happen in Bitcoin. And Ethereum, I imagine, will go down again into the 3-figure club. It's looking, I think, post-September, and should base support be breached, that'd be perfect ingredients to get cheap Ethereum. But at the moment, Ethereum is too good. There's too much rumor going. There's too much rumor. Once you kind of sell the news, then Ethereum could reach a better buy price at that point. Suppo the man, do an episode of allocating 50 to 100k to get $1 million. Not financial advice, but do it. I'll have a think about that. Another from Lindsay Gardner, another gold episode. Nice one, Suppo. Now show the team how to smash that like button. Oh yeah, I haven't done that, have I? I just realised. So let me just make sure once again. Again, the thumbnail hasn't really come out how I wanted it to, which is very, very odd, because that's how it's showing on my thingy-majiggy. But if you could, be so kind, you lovely people, because you are still active in cryptocurrency, and you are the ones I imagine that are still going to be active in cryptocurrency when it gets boring. Smash that like button to give yourself good luck. 1 like equals 1 good luck. So thank you very much for the reminder, Lindsay. Veracity, any thoughts? No, if I'm honest with you, but I know that it's got a cult following, and a lot of people love it. It's just not my kind of thing. It's like esports. I really couldn't give a rat's about that shit. Superman, what about Stratos? You know, it's going to be a tough one. They undoubtedly probably have the funds to survive, but you know, it depends on how long this lasts. You know, there's all sorts of, you know, at the moment, because the government are lying to us essentially. Then, you know, people don't know if it's going to be a short, sharp recession, if it's going to be a very shallow and ineffective recession, if it's going to last for 2, 3 years or 4 years, right? People are speculating at the moment, and you've got very, very learned schools of thought from very, very experienced people who are all saying different things. So we don't know how long it's going to last, but the ones that have had a VC back them are the ones most likely to survive multiple years until the next bull cycle. Hopefully Stratos can be one of them. They were definitely at the point of beginning their ecosystem, but that has been, I would say, stalled because of what's happening now, because of the macro picture, because of the economy. So we'll just have to wait and see. I can't tell you whether they're going to survive or not, because I don't work for them. I don't have an idea of their financials. I can't say if they're going to survive. And I certainly got into a lot of good new projects back in 2018 that ended up dying quite quickly. So, you know, you just never really truly know. But I think the Stratos should be good. It's a layer 1. You know, it's focused on content delivery platforms. They've got a very good consensus algorithm, which will be good for their video platforms. So, you know, you never know. Suppoman, Neo will survive from Togger. There's a difference. Surviving and thriving are different things. And Neo, I think the jury's out on that one. Like, I personally think that Neo is a little bit like the name coin of old. So if we go have a look back on back in the history books, let's go back to a random date, November 2013. What we had back then was we had, you know, these three are still around now. We had Peercoin, Namecoin, Novacoin, Feathercoin. You know, these were the big cryptocurrencies of that period, yeah? And they're all dead now. Neo was one of the big cryptocurrencies of 2017 that could have done really well. I'm still staking it, but you know, do I think it's going to make an incredible comeback? No. I think in this world of marketing, etc., it's pretty weak actually. A 10-to-1 ratio. It's not great. It's under $1 billion. You know, it's not really the asset it was. You know, it's been superseded. We're in modern times now, and I think that amongst the best are investments like the Sandbox, which hopefully will go down significantly from where it is now. But these are the big leagues. These are the new unicorn companies that will come out of crypto this era. From Eva Me, Mr. Suppo, here in Monaco, we are smashing the like button. That is fantastic. In Monaco, of all places. Glamorous place, beautiful people. So, yeah, thank you very much, Eva. I appreciate that. Velas Chain, yeah, I think that's a good one. I've obviously got that as a kind of high-risk, diversified portfolio play. I think it could do really well. I don't think they're not going to run out of funds anytime soon. Are they going to be a bit like Matrix AI, which was another infrastructure came out of 2017, that did well initially, was really hyped at the beginning, and then eventually died. It could be one of those. You just got to kind of hope that you know, they can last. But I think they will last. I think it's actually close to the top. So diversified portfolio, high risk. Are they in mid risk then? Yeah, they are mid risk. 97 mil. Yeah. So I think Velas will probably go down to about 1 cent, maybe a little bit more. Look at Alluvium. Wow. That's $115. What's that been lately? $90. Yeah, Alluvium I think is a good one. It's a good kind of hedge against Axie Infinity, which I think, look at that. $1.4 billion project with 160 10-to-1 ratio. Have a look at Alluvium. This is a 5-to-1 ratio, much better. So I think this is more popular, likely to be more popular and do well during a bull rally, which will undoubtedly come. Bottom was 17,500. We will see. I think that, patience is a virtue, and B, we are in unprecedented times in cryptocurrency. So no one can say one or t'other. But what I will say is that given that financial markets haven't breached their base support, which will happen undoubtedly in a recession, and like I've shown you already, the big damage of a recession is done kind of a year after the recession started. And I think that a recession may have started beginning of this year. So, we've just been lied to. In which case, I think the beginning of next year is going to be where we see the real bottoming occur. But I think even before then, I think we've got likelihood of going below 17.5. But again, it's just my opinion. Like with a lot of financial analysts, it's you never really truly know. But the more experience you have, the more educated your guess. Whereas a lot of people kind of in cryptocurrency who are saying the bottom's in are kind of just regurgitating other people's opinions. Like, let's say Crypto Crew University. People who are saying, bottom's in, are probably just regurgitating him. You've watched him, you trust him. He's shown evidence that we've bottomed through his pi cycle and something else maybe. And, you're like, essentially you are not thinking for yourself. You're basically just regurgitating what somebody else has said, who also may be wrong. So at the end of the day, most people who are saying that we've bottomed aren't really sharing their own opinion. They haven't done any research. They haven't looked into it themselves. They've not looked into recessions of the past. And to an extent, you can only know so much if you're not in the top 1% of the 1%. So, ultimately, everybody's guessing. But what I will say is that if this is the damage, it's pretty pathetic. My personal opinion. I think more coins need to essentially do a lunar classic. Go from $100 to virtually nothing. That is what needs to happen, and it hasn't happened yet. And in which case, this recession, the macro picture, mixed with a Bitcoin bear market. So the macro picture, so the Bitcoin bear market in itself should hit 75 to 80% drop. All right. But with the macro picture accompanying it and actually exacerbating it, we should see something more along the lines of 90 to 95% across major assets, not just altcoins, but Bitcoin and Ethereum too. In which case, I personally think, and have good reason to believe, we're nowhere near a bottom. How can it be? Julio, Suppo, tell us about MetaGods. Actually, there is, and I probably will do some form of... wow. That is ridiculous. I can't show you now. I want to show you their newest launch. And my God, Mustasign. I love it, but I don't know what it's going to do to the stream if I play it. Let's have a look. Let's have a looky look. It's really good. Really high quality. I better put it down just in case it does play. But MetaGods looks great. And of course, what I'm sharing with you, I will take it off. Look at that. Hold on. Can you see any of it? I think that the stream is going to suffer. Let me just have a look. Still says excellent connection somehow. Why is there no sound? It's insane. Look at this. Wow. I love the music. It's really cool. Looks so much like Legend of Zelda. I don't know how much I can play of this. But essentially what you've got here is you have got, like, if you've ever played Link to the Past or Legend of Zelda or anything like that, then you will recognise a lot of this. It just looks so cool, what you can see so far. And of course you can play it as well. There's a level available. They've really improved the game so far. So anyway, this is all I'll show you for now, because I don't want it to ruin the stream. But MetaGods looks pretty exciting. And they are only really continuing to build. So I think it's quite a travesty. 33k volume. I don't understand it. I don't understand why it's so low. But I think it'll do well over the course of time. I think that's it for today, because I've been online now 1 hour 16. So unless we've got any more questiones, your stream is not getting better from this. No. Oh, whoops. I don't know what's going on. I hope I'm still live. Suppo, you still bullish on Elrond? Yeah, I'm still bullish on Elrond. Still think it's a very good cryptocurrency to get in. Honest thoughts on Solace? I have actually not looked into Solace at all recently. Newbies will get washed out big time in the coming weeks and months. Yeah, I mean, my personal opinion is that, you know, the noobs are going to get... It depends on their financial situation. The people that always get hit the hardest in recessions are the middle, well, mainly the lower working class and then the middle class. I don't want to be classist, obviously, but hold on, let me just see how this stream is looking live. Yeah, it's looking fine. So anyway, yeah, so I think that obviously there's been a lot of exuberance over 2020 and 2021, a lot of money pumped into the market, quantitative easing, and people were spending left, right, and centre. And yeah, a lot of people may have bought near or at the top and hodled. And of course, as this recession keeps on going, as it increases in its timeline and its life cycle, more people are going to realise how badly they've budgeted over. I mean, I'm thinking about myself as well. You know, I am really not spending at all at the moment. In 2021, I was. Yeah, I bought like a private reg for my car. I bought a new car. I bought a penthouse. Oh, hold on. And I was spending money like it was going out of fashion in 2021, and now 2022 has come along. I've got to make sure I've got enough money to pay my taxes. I've got to make sure I've got enough money to for general life maintenance. You know, for the normal day-to-day costs associated with living. You know, heating, gas, water, electric for my car, all sorts. The government taxes and stuff. So I am not really spending now at all. And this is me. I'm a big spender. I'm a big spender. But, and I'm not spending. So when it comes to being economically challenged, which many will be financially and economically challenged over this coming period, a lot of people are going to not spend as much and they're going to start selling off. And that's when I think that these little, don't underestimate the retail market. All right. So as I said in a very recent tweet, is that for every whale investor, there are 500 retail investors. Okay, so don't disregard the power of a lot of people and their investments. You know, if they start selling off in droves, yeah, we're going to see a big hit. And even if over the course of, let's say, a 6-month period between the beginning of 2023 and the mid 2023, where earnings start going down, people start getting unemployed, out of jobs, and you know, energy prices and utility prices go up, not at the rate of inflation, then what you're going to have is you're going to have people selling off their assets, you know, kind of incrementally. And that will have a big overall effect on the market. And that is what people, I think, are just so oblivious to. You know, I just think that whether it's a short or a long recession stroke depression, we're still at the early stages of it, and there's still more to go, and there's still more hardship. And this is not even considering the famine that's going to come from next year with Ukraine not being able... I think they're starting to get some food supplies out, but they supply Africa with food, and they've gotten a ship out, and it's one of the first ships they've had since being invaded. So, you know, there's going to be knock-on effects and domino effects over the course of time. So just don't downplay that. People who are bottom grabbing now and saying, oh, the bottom's in now, where's the real hardship? I haven't felt it. I haven't felt it yet. Yes, I'm saving, but I haven't felt it yet. You know, and I wasn't old enough back in 2007, 2008 to feel that I was still, you know, just roughly out of university and working. You know, I wasn't hit by that. It didn't affect me, the last recession. But it did affect many that I knew that had bought houses at the peak, that had invested at the peak, and they got absolutely screwed. And there's no hardship yet. There's no hardship yet. If people are in this chat right now saying, we've hit the bottom, with no hardship, like, I just find it slightly delusional. The only way in which I think a bottom has been hit is that we had the concoction of 3 big events happening at the same time as the macro picture disintegrating, which is what caused the 17.5. It was a fantastic series of events. But even though we are now 6k from that figure, no, 5.5k from that figure, we're still in the low 20 zone. We have not gotten away from this. We've not gotten into this zone, nowhere near these zones. We're still at the low with potential turmoil to come, which means unless it goes to 40 and then could only drop down to 20, if it stays in 20, then there's much more potential for a drop to 10. That's where I'm coming from. So unless the market significantly goes up, then I don't see any reason why we can't go lower. And I don't think that the SEC will approve a spot ETF until we've hit much lower figures, aka 10k or so. So yeah, so I think there's I think that I think that there's just more, but everybody's just kind of divided at the moment. Everybody's divided. People are like, it's bottom, it's not. But I would implore you, if you are a bottom, if you feel the bottom's in, why do you think the bottom's in? Moon Lambo, ask yourself what could possibly happen worse than the recessions, which is already priced in. The recession isn't priced in. Like, all that's priced in at the moment is the Fed interest rate. Okay, that is what is priced in at the moment. The recession is not priced in because the panic hasn't been created yet. You know, the American people are being fed a narrative that everything's fine. Jobs are up. Earnings are up. You know, yes, we've had 2 quarters of negative growth, but we're not in a recession. Midterms are coming. You know, the landscape is being made to look better than it is. You know, inflation is in a very bad situation, and the only way to tackle that is to increase interest rates higher than the rate of inflation, which is not going to happen. And it's likely that the rate of inflation is not 9.1%. It's more likely in the double figures. So the market has not felt panic yet. And the Fed is not listening to warning signs. They are just pumping the economy with hopium, with the economy strong. The panic hasn't been created because they've got a midterm election to win. You wait till 2023. That's when I think that the shit's going to hit the fan. And we've also got, kind of macro stories like this. We just haven't, I don't think we haven't yet gotten close to feeling the pain yet. What do you think of Happy Protocol? There's a difference, okay? So I think that the vision of Happy is pretty good. It's essentially a security oracle. A business can implement the software just like they can implement the Oracle software, just like Chainlink. So Chainlink gets information off-chain and puts it on-chain. Happy is an oracle where you find out if the chain is being breached, if the security of the chain is being breached. You can see if Uniswap has got some form of Ethereum-based issue with something like Happy. So as far as I'm concerned, the vision of Happy is excellent, but the belief isn't there. Like, you need to have good marketing and many people liking it. And the differentiator between a project like Chainlink and a project like Happy is hype. Okay? Chainlink is one of the most popular Russian-based projects. They got a shit ton of money. I know the market makers that were involved in pumping Chainlinks to $40. And that could have gone much, much higher if it wasn't for, bearish trends. But Chainlink has a lot of money to put into marketing and market makers, whereas Happy they're part of Hacken. Hacken don't have anywhere near. They're very good at cybersecurity, but they're not very good at marketing, and they're not very good at outreach and developing, metrics that make exchanges look at you. They are not using market makers to inflate the demand, and as such, they can't get on to better than Qcoin. So, you're not going to see them on Coinbase and Binance if they don't show proof of market makers or proof of liquidity. So Happy's good, but in cryptocurrency, you can't really afford to put your money into cryptos that aren't good at marketing. You need to put money into cryptos that are fantastic at marketing and are constantly building partnerships and getting the whales to be excited. And Sandbox is one of the best examples. Same as Decentraland. Like, the volume is so significant that they are very unlikely to die. Whereas something like Happy, they could die. Anything on VPad? I don't really know. I'm not interested in any launch pads right now. Right, I think that is it, because I've now been on 1 hour, nearly 1 hour 40, and I really like to be on a maximum of an hour, I suppose. Plus, we didn't get over 400 likes, so there's no incentive for me to carry on. You obviously don't want me to talk about more cryptos. Crypto is boring now. No, it's not. Crypto is not boring now. Crypto is awesome still. Look. 72 billion. That's not dead. If we go back to 2018, you had less than 10 billion. That's not dead. This is not dead. The market cap's still way too healthy, I believe. Oh, we have got over 400 likes now. So, thank you very much. What do you think about Merit Circle? Yeah, they're okay. They're obviously very well respected in the games guilds. Very well respected. But look at this. It's like, what's that? It's like 13-to-1 ratio. It's not really good enough. But, it probably could be okay. We are watching you. Exactly, Vicky. You're watching me, so you can't be bored. Cult thoughts. Yeah, I've shared my thoughts a lot about Cult DAO. I think that Cult DAO could have been, if it was the case that the bull market had continued, then it would have been the case that Cult could have been kind of like the next Shiba. it's the volume I remember Cult Dow having. Look at that, 83 million. That really reminds me of early stage Shiba Inu. So let's just have a look. So 83 million. All right. Let's have a look. Early stage Shiba was around about January last year, I'd say. January last year. Oh, they haven't got it properly. What? What the hell? This can't be right. Am I in Shiba Inu? Was it really this low? Oh, maybe it was April then. So the real bottom, the people who were buying at the bottom, like there was so much risk at this stage. Look, like the $6.35, hardly any volume in Shiba Inu. And then all of a sudden, bang, it was like 100 million. But this was April, March to April last year was like meme coin season, and Shiba was the king of memes at that point. So the volume was insane. But Cult would be probably the king of memes if there was a bull market. But there isn't. But Cult, I think, is very similar. It's like one of the very few crypto meme coins that has got insane volume despite the market environment. So this could be a good one. Suppo, do you think that your perception of this bear market is different because you are now more wealthy than the last, so you're not in that more pain? No, I don't think so at all. Because you've seen already that my portfolio has been hit catastrophically, and it was the same situation in the last bear market. It was exactly the same. The difference is that in the last bear market, we didn't have a macro picture. We didn't have the everything bubble bursting. We just had the crypto bubble bursting. In this one, we've got the everything bubble bursting. Crypto, everything. All right, crypto, luxury watches, stocks, properties, cars, all sorts. All sorts of assets are going to go down. And it's not even happened yet, I don't think. Cult is crowdfunding. It's not a meme. Bullshit. It's a meme coin. I don't care what people say. It's a meme coin. Like, you don't take it seriously. Suppo, I could watch a 24-hour stream of you talking about Moonbeam. That's very sweet of you. Right, I probably should now make a move. Yeah, I probably should now make a move. So, people, there we are. I hope that you have felt a lot of the reasoning that I have attached to why I think crypto collapse is incoming. There is data to suggest we are nowhere near the dangerous time. We are essentially here. We're in the early stages of recession where it's like not even being acknowledged as a recession when it's actually probably been a full-blown recession for a few months now. And the market panic has not been that strong. There's not been a huge amount of casualties. Even in crypto terms, only a small amount of casualties. Four big casualties. Voyager, Celsius, 3 Arrows Capital, Luna. Nothing big at the moment. No Coinbase. No major entity going down. I don't think Binance is going to go down. But once a big entity goes down in crypto, you're going to have one of these. Once a big entity goes down in one of the, let's say, earnings, Netflix as an example. Netflix, less and less people are watching Netflix. The price of Netflix will undoubtedly go further down, and the Nasdaq will shoot down as a result. You just need one collapse to send everything haywire. Back then you had Lehman Brothers, Northern Rock, a load of banks, a huge crash and some big casualties, and that led to the big market panic and the big falling. And at this present time, as I've presented to you, we are kind of not even approaching pain. There's no pain. All right, there's more pain to come. Even looking at previous recessions, unemployment rates were much higher. There's no the economy is thriving too much, and therefore, there is a much bigger world of pain coming. It's inevitable. Think about it. The problem of inflation is not going to go away. So even if we come out of a recession, out of what traditionally is a recession, which is the poor economic growth, if we come out of a recession, the likelihood is that we're still not going to get rid of inflation. Inflation will continue, which means that, you know, the problems don't end. And we're just going to be in a very long cycle of nothing. So we need to essentially get out of this problem by it getting much worse before it gets better, like with what happened in 2007 to 2009. We'll recover, we'll come back, everything will be peachy, and we will make severe, violent money in that period of when it goes right down. That is the time to buy, and that's when I'm waiting. I did a bit of dollar cost averaging. There's going to be way more opportunities where I'm going to be putting most of my money in. So there we are, people. I hope you've learned a lot. I hope you've, I suppose, even seen the rationale explained to you. And I hope it's given you food for thought. There is very likely going to be all-time best prices coming up for crypto. Till next time, people, you've been amazing. I've been the Suppoman. It's lights out.